Hey everybody, Joe here from Avalon. We're coming up on a new year, and with the new year comes a bunch of changes to tax programs for Canadians. In this video, I'm going to break down the important tax changes for 2023 that Canadians need to know about. It's been a challenging year with the highest inflation we've seen since the late 80s and record interest rate increases to match. So thankfully, most of the tax changes I'm about to discuss are going to help Canadians save their money and pay less tax. But check out the video chapters for the different sections and feel free to click ahead to the section that's relevant for you. All right, so our first important tax update is an increase to the annual maximum RRSP contribution limit. So the RRSP, or Registered Retirement Savings Plan, is a savings plan that is registered with the Canadian government. It's designed to help Canadians save up for retirement. And so let's start with a very quick recap of how RRSPs work. All right, so with RRSPs, you can contribute cash or investments to your RRSP account and receive a personal tax deduction off the top of your income for the amount of that contribution. The deduction reduces the amount of personal tax payable, which often shows up as a refund on your tax return. So investments held within the RRSP can grow tax-free while they remain in the registered account. Your funds are only taxed when you withdraw them from your RRSP account later. So here's where things have changed in 2023. So each year, Canadian residents build up RRSP contribution room at a rate of 18% times their earned income. Most commonly earned income includes employment income from your job, business income from self-employment or a partnership. Rental income would be included in this as well, but it does not include dividend income or investment income. So previously, the maximum annual increase to the contribution room was 18% of earned income, up to a maximum of $29,210. So in 2023, that annual limit has increased. It's still 18% of earned income, but the maximum you can contribute has increased to $30,780. So the annual maximum contribution has increased by $1,570, which is great news for those earning more than $165,000 a year. Next up, we have an increase to your annual TFSA contribution limit. In 2023, the amount that you can contribute to your TFSA will increase by $6,500. TFSAs are investing accounts made available by the federal government to Canadians 18 years or older. TFSAs are designed to help Canadians invest and save their money, but they're a little bit different from RRSPs. So with TFSAs, you can contribute cash or investments to your TFSA with the idea of investing or building up your savings. Your investments can grow tax-free inside the TFSA, but unlike RRSPs, there's no tax deduction when you contribute to your TFSA. However, funds are not taxed when you withdraw them from your TFSA like they are with RRSPs. TFSAs are designed for more short-term savings compared to RRSPs that are designed to save for retirement. It's right in the name. So Canadian residents aged 18 and up receive an increase to their TFSA contribution room each year. The program started in 2009 with an annual TFSA contribution room of $5,000. The annual contribution limits have slowly increased along with inflation, and you can see in this chart how much contribution room has increased each year since 2009. The annual TFSA limit increased from $6,000 in 2022 to $6,500 in 2023. If you were born in 1991 or earlier, and have been a Canadian resident since 2009, you'd be able to contribute up to $88,000 to your TFSA. Next, let's look at TFSAs for new Canadians. Any individual that is a resident of Canada who has a valid SIN social insurance number and is 18 or older has ability to open a TFSA. This is a great savings tool for eligible Canadian residents. So non-residents who are 18 or older and have a valid social insurance number can still open a TFSA. However, any contributions made as a non-resident are subject to a 1% tax for each month that the contribution stays in the account. This 1% tax usually means that it's not worth it for non-residents to bother contributing. So if you're a new Canadian and you open a TFSA, you'll have contribution room starting in the year that you open the TFSA. For example, if you became a Canadian resident in 2022, you will have $12,000 of TFSA contribution room in 2023. That's $6,000 from 2022 and $6,500 from 2023. This table shows how much TFSA contribution room you would have available based on the year that you became a Canadian resident. I think the TFSA is often overlooked. It's a really excellent way for Canadians to save and invest their money. All right, so one of the most interesting tax changes coming in 2023 is the introduction of the First Home Savings Account, or FHSA. That's going to be a mouthful. The FHSA was designed to help Canadians save up for the purchase of a home. The FHSA is a tax-sheltered account with similarities to the TFSA and RRSP. So similar to the TFSA, the funds that you invest in the FHSA can be invested and allowed to grow tax-free. On top of that, the funds that you contribute will create a tax deduction on your personal taxes, similar to the way that RRSP contributions work. When you're ready to purchase an eligible home, you'll be able to withdraw the funds tax-free to make your purchase like you would with a TFSA. It's really the best of both worlds when compared to TFSAs and RRSPs. So the FHSA was first announced along with the 2022 federal budget and is expected to be implemented sometime in 2023. Some of the details aren't finalized yet, but here's what we know so far. So the FHSA will have a lifetime contribution limit of $40,000 and an annual contribution limit of $8,000. If you open an FHSA in 2023, you'll be able to contribute up to $8,000 during the year and receive a deduction on your taxes. If you contribute $8,000 each year for 5 years, you will have maxed out your lifetime contribution room of the FHSA. So if you open an FHSA in 2023 and only contribute $3,000, you'll be able to carry forward that $5,000 of unused contribution room to subsequent years. That means in 2024, you can contribute the unused $5,000 plus your current $8,000 for a total contribution of $13,000. The unused $5,000 from 2023 carries over to that 2024 year. The program will likely become available in the second quarter of 2023, which is great news for those of us trying to save up for a home purchase. There are some restrictions to the use of the FHSA that you need to know about. So to be eligible to open an account, you will need to be a resident of Canada who is at least 18 years of age. For withdrawals to be non-taxable, you need to be a qualified first-time home buyer. That doesn't necessarily mean that you've never purchased a home before. What it does mean is that you can't have lived in a house that you owned within the last 5 years. For example, if you owned and lived in a home but moved out in 2022, you would need to wait 5 years before you can be eligible as a first-time home buyer. There are some additional nuances that we'll explain in a future video once the program has been finalized. But for now, I highly recommend that future homebuyers start saving up their first $8,000 to contribute in 2023. All right, next up, we'll move on to the upcoming changes to the Canada Pension Plan. So specifically, we'll look at the change to the maximum CPP contribution amount. So the Canada Pension Plan, or CPP, is a federal pension plan that all pensionable workers in Canada contribute to by law. Employees will be familiar with the line item on their pay stub where the CPP is deducted from their pay. In 2022, CPP was deducted at a rate of 5.7% on employee pay. The maximum amount that could be deducted from an employee's pay during the year was $3,499.80. In 2023, the rate will increase to 5.95%, and the maximum will increase to $3,754.45. This means less money for employees, and the increase will be felt even more by employers and self-employed individuals. In Canada, employers also pay CPP contributions equivalent to the amount that their employees pay. The increased employee contributions will mean that the employer contributions and costs will increase as well. Self-employed workers will also be noticeably hit with the CPP increase. They pay both the employee CPP contribution as well as the employer portion, and this means that a self-employed person who earns more than $66,600 a year will pay over $7,500 in total CPP contributions to the government. That's the employee portion of $3,754 plus the employer portion of $3,754. 12% of earnings gone for the self-employed even before they start paying income tax. Yikes. Okay, moving on to some better news for taxpayers. So federal tax brackets will change in 2023 to account for inflation. So if you're not sure how tax brackets work, check out our article linked in the description below. But with these 2023 tax bracket changes, the federal tax rates aren't actually changing, but the earnings brackets are increasing. So in this chart, we can see that the tax rates remain the same, but the taxable income amounts within each bracket are going up in 2023. For example, your first $53,359 will be taxed only at 15%, whereas last year, your income above $51,197 started to get hit with the next tax bracket at 20.5%. This change means that more income is taxed at a lower rate than before, which reduces your overall tax bill for all Canadians. Now, it's important to note that this doesn't account for provincial tax rates. We're just talking about the federal tax brackets here, but it's still good news. Again, check out that article linked in the description to see how federal and provincial tax brackets affect how much tax you pay. All right, continuing on with the good news for Canadians, we have an increase to the basic personal amount, or BPA. So the BPA is a tax credit that can be claimed by all Canadians. It allows workers to earn up to a basic personal amount without having to pay a single cent in federal income tax. So in 2022, the basic personal amount was $14,398, which meant that a taxpayer could earn up to that amount and not pay any federal tax. So in 2023, the BPA is increased to $15,000, which gives a bit more cushion to workers before they have to start paying federal income tax. So as mentioned, there's still the provincial tax rates to account for, but this is still a nice break for Canadians from federal tax. The lifetime capital gains exemption is a significant tax break that is provided to Canadian business owners. It allows owners of qualified small businesses to sell the shares of their business at a significant gain without having to pay any tax. So in 2022, the lifetime capital gains exemption was $913,630, meaning that a business owner could sell the shares of their business at a gain of almost $914,000 without paying a cent in tax on that gain. In 2023, the LCGE amount has increased to $971,190. That same business owner could now sell at a gain of $971,000 before any tax would need to be paid. This is a pretty amazing benefit, but it only affects business owners in Canada who run a small business corporation and are able to sell the shares of that business at a gain. For more details on the lifetime capital gains exemption, check out our article linked in the description of this video. All right, the goods and services tax credit is designed to help offset the financial impact of GST for low and modest income people and families. The credit is paid quarterly in January, April, July, and October. So the total amount received depends on the family size and income. For the July 2022 through June 2023 benefit year, eligible people can receive up to $467 for singles without children, $612 for married or common law partners, $612 for single parents, plus $161 for each child under the age of 19. So to ensure the GST credit is targeted to those who need it the most, those with family net income of less than about $40,000 receive the full credit amount. Above that income level, the GST credit is gradually lowered as income increases. The full phasing out depends on family type. For instance, it's fully phased out at about $50,000 for a single person without children and about $58,500 for a couple with 2 children. In 2023, eligible Canadians are expected to receive double the amount of the tax credit for 6 months. This is another proposed tax change, but appears likely to be confirmed in the near future. So pending parliamentary approval, the proposed extra GST credit will be paid to all current recipients through the existing GST credit system. There would be a one-time lump sum payment made before the end of 2023. All right, so glad we could end this video on another positive note with some tax savings for Canadians. Those are the top changes to Canadian taxes in 2023 that you should know about. If you have another tax topic or update that you would like us to cover, please reach out in the comments below. We're happy to provide general guidance as we really do enjoy answering your questions, so please don't be shy. If you have enjoyed this video or it has been helpful for you, please hit that like button And if you like content like this or are a small business owner yourself, please consider subscribing. We really appreciate all the support that we get. And thanks again, and we'll see you in the next video. Cheers.